Hello everyone and welcome to episode 9 of Estate Planning TV. I'm your host, Christopher Small, and this is the internet's most passionate show about estate planning. Welcome. Today, I'm super excited to talk about, usually when people come into my office, and I've talked to a lot of people, they want to talk about one of three things. They want to talk about protecting their kids if something happens to them. They want to talk about making sure that their family doesn't just burn everything after they're gone, and they want to talk about estate taxes. So I thought today we would talk a little bit about estate taxes. I've got a whole bunch of different strategies for avoiding estate taxes. This is going to be strategy number 1, basically. This is estate planning tax avoidance tip number 1. All right, and it's important to remember that at the time of recording this, if you live in Washington State, which is where I'm from, or where I live, where I practice right now, there are 2 estate taxes potentially that you're facing. There's a Washington State estate tax, and there's a federal estate tax. The Washington State estate tax starts at $2.129 million, and that includes the value of your home, the value of your bank accounts, the value of your investments, and life insurance. Okay, so for a lot of people in the state of Washington, that's a relatively small number, particularly when you take into account life insurance, because we all have robust life insurance, right? Yes. Okay. Good. If you don't, call me. I'll talk to you about it and tell you why it's important, because it's extremely important for a whole bunch of different reasons. But $2.129 million is really pretty easy to get to. At the federal level right now, it's $5.48 million. And so that's a little bit tougher to get to for most people. It's not something that a lot of people have to worry about. So today we're talking about whether you're at the Washington State level or the federal level, it doesn't matter. They're both going to work for what we're talking about here. And by the way, these tips that I give you as we move forward, they can kind of stack onto each other, and you'll see how one tip can kind of be used alongside another tip to really sort of exponentially increase or decrease your tax liabilities. All right, so what we're talking about today is gifting, and it's pretty straightforward, really. All of us, you, me, your spouse, your significant other, your kids, potentially, have the ability to give away. All right, let me back up real quick. So the way this $2.129 million works is it's not really an exemption necessarily. What it is it's a gift allowance. Okay, so you have the ability to give $2.129 million away to anybody that you want before you have to start paying estate taxes. All right, that's the big number. You can do that at one time. There is another gift exemption that's what we're going to talk about today. So without eating into that $2.129 million, you have the ability to give away $14,000 a year to as many people or as you want. Okay, so if you have 10 kids, you can give away $14,000 to each of them without having to eat into your $2.129 million gift exemption. If you have a spouse, if you're married and you have 10 kids, then you can each give $14,000 away. This becomes important because it can help to sort of minimize your estate. It can begin to sort of keep your estate on hold, potentially, depending on how much money you're making every year. But there's another interesting, thoughtful reason to gift. What giving people this kind of money every year is going to do is going to give you a sneak peek into how they're going to use the money when you're gone. And so you'll be able to see, do they just burn it all on parties? Do they buy a new car? Do they invest some of it, right? Do they use it for good? Do they use it to pay down debt? So kind of give you an idea of what you might expect when you're gone with the way that they will treat the money that you give them. And this is important because it can really impact how you plan for the future. All right, so $14,000 a year to as many people as you want. There's no maximum number of people that you can give to. But if you go over $14,000, then you have to start taking that, you have to start claiming that on your tax forms, and it starts eating into that 2.129 million. One other thing that's important to remember is that this $14,000 gift, you don't have to pay tax on it, but neither does the person receiving the gift. It's received tax-free. So that's really kind of cool. All right, that is it. Thank you for watching Estate Planning TV. Catch you next time.